all, welcome to Bro Billionaire. It's 29th of October 2022. We are doing Nifty's weekly analysis, and as we have read from the thumbnail, we also will discuss is 18K curse for the Nifty. By curse, we mean to say it's not able to sustain above 18,000. So that thumbnail is from the idea that it has got rejected from 18,000 five times. Okay, 1, 2, 3, 4, and 5 here. So what's going to happen in a sixth attempt? So that is $1 million question. So we'll try to find answer for that. So in this video, we are going to analyze Nifty for next session as well as for next entire week. This analysis is pretty complex as we are going to discuss three methods. We are doing this complex analysis for the sake of finding the swings pending for the upside or for the downside. So yeah, in this video we'll discuss indicators and price action, then we'll discuss Elliott Wave, and after that we'll discuss the option chain. So before we discuss all those stuff, let's understand the previous week's analysis. So in previous week we discussed that Nifty would face resistance between 17,800 and 17,500, and there was a chance that Nifty would make an ending diagonal pattern. So this was the chart from last week. This was the chart from 22nd of October. So we had a Diwali week. So there was only 3 trading sessions. One day was off and one was Muhurat trading. So we started with big gap up. After this, okay, we opened a gap up. Then the gap did not sustain, and in next sessions again the gap up. So this gaps continued, and it looks like this analysis is going well with complex correction W, X, and Y. We also mentioned we are heading towards 17,900 to 18,050 max, and we are not expecting a break of 18,096 because we have dropped in 3 swings and we are going up in a 3 swings on the upside. So this drop is sharp, this pullback is slow. So these are a couple of hints that tell us that 18,096 may not be broken. So let's get started with indicator based and price action based analysis. So here you can notice the first thing that Aron has turned very bullish. So Aron is a 25 period indicator. So it indicates the trend and it takes the time into the consideration. So here you can see it has turned bullish. So it has went to extremely bullish zones. So when it goes to extremely bullish zones, there is a chance that potential breakout will be coming in the next couple of days. So yeah, here you can see it was highly bullish. So 70, if line is above 70, green line is above 70 and red line is below 30, this is considered as extremely bullish scenario. So this was happening here. Okay, so we have to look for next couple of sessions whether Nifty is able to break 18,096 and if it can break 18,600. So the indicators are turning bullish. RSI is also above 50, which is also considered as a bullish signal. So from lower side, it has went above 60. So that is also a bullish signal. All the moving averages, 200, 100, 48 and 13 EMA. Nifty is trading above all of them. So these indicators are indicating a bullish sign for us. So the next resistance for us is at 17,900, then 18,000, and then we have resistance at 18,100. So these are the 3 resistances that we need to remember. So in next session, most likely 17,900 will be broken. It will go about that and it might touch 18,000. So these are the 2 cluster points which we need to remember. We could face resistance in between these 2 and we could give a small pullback. At least a small pullback can come. But we should be careful and not to be in a hurry to look for a downside opportunity. 18,000 is anyway a psychological level. It has acted many times as a resistance and we dropped many times from that. It didn't sustain for longer period above this. So there is a chance that our analysis could play out and we could touch 18,000 but will not sustain above it and then start the sharp drop. So this was the basis of indicators based analysis, but indicators are telling you everything is bullish. So now the next part is Elliott Wave analysis. So in Elliott Wave, we discussed previously these charts. We'll go through them one by one. So we have mentioned that we could be in a WXY correction, and whenever the 5-wave sequence complete, at least it heads towards the 4th wave's low. So there is no guarantee that it will head towards it, toward that, but you can also notice 0.32 Fibonacci, and we are expecting minimum 15,000 or 15,183 break, and it could touch 15,000 and then could pull back, and this should be the last leg of the fall, after which it can break out. So we have discussed in detail long-term aspects of Nifty in this video. Okay, this is the video where we have discussed these things. You can watch that. I'll add the link in the YouTube card above. It will be pop up here. You can watch from that. Apart from that, I would also request you to add the comments. We see our views are dying and subscribers are also dying. You can see here 27 are less than usual. So we were around 300 subs. They are reduced. So every month we were adding 250 to 300 subs, but that has reduced. Views are also dropped. So I request you to support the channel, share with your friends. We see here that 55% of our viewers have not subscribed to this channel. So yeah, so this was the view. After that, we also discussed that Nifty would fail and it would not break 18,115, as we were seeing a 3-3 wave structures developing on the upside. So that thing we discussed in September, then it formed ending diagonal, and then we dropped towards I think 16,800 to 16,750 something. So this was the chart that we analyzed. We were expecting a 5-wave sequence fall, but it turned out to be a three-wave sequence and made a low near 1.600 Fibonacci. We were saying that it will come minimum towards this. Nifty had made 16,747 low. So yeah, this was the low. And after that, once it started the pullback, once it moved above 0.32 Fibonacci, we also mentioned from this point onwards that we will head towards minimum 0.6 Fibonacci, and 17,900 can also come. So these are our couple of previous charts. So this was on 15th October. Again, we mentioned an up move once we break 17,348. And there also we mentioned 17,900 will come. So these are, this is chart from last week. Here also we mentioned we are heading towards 17,900 minimum. 18,050 can also come. So this was the chart from last week. We'll continue with this chart as well, and we'll see 3 cases. So case 1, we are continuing the previous analysis. Here we are assuming complex correction WXY, where W is a 3-wave structure, X is a 3-wave structure, and this Y wave is a 3-wave structure. So 3-wave structures are developing. So this indicates there is a potential chance of drop as well. So when market moves in 5-wave structure up, then only we can consider that from the lows, it needs to move in a 5-wave structures on the upside. If it moves in a 5-wave structures up, then only we should consider that the trend will continue on the upside and it will break the previous swing. So here that is not looking, that case is not looking like that. Okay, so if you check all the previous moves, so these all previous moves are 3-3 wave structures. From the bottom, it is coming as a 3-3 wave structure. As they are a 3-3 wave structure, I don't have a confidence of breaking 18,600 as of now. So if it's something like the strong structures like this, like developed here, okay, so strong structure developed here, okay, or even here, it pulled back very sharply on the upside. So they indicated that there was a potential to break the previous swings. So these things are not developing right now. So that's why I'm not at all bullish, or you could say we should not consider the bullish move. Notice here there is a negative divergence as well on MACD. So we were on this chart. Okay, so there is a negative divergence and it is forming a one pattern, or you could say forming a triangle or a falling wedge. So here what we are expecting in this chart is A, B are completed here, and final C wave is in progress, and C waves internal 1, 2, 3, 4 are completed, and final 5th wave could be in progress. So pink wave is 5th wave is in progress. So here there is a catch. It should not break 18,033. That is the length of this particular third wave. So in Elliott wave, wave 5 cannot be greater than third wave, as wave 1 is already a bigger wave. Okay, so third wave cannot be the shortest wave. That is the rule in the Elliott Wave theory. So here in this chart, with this chart, we are saying that Nifty breaks 18,035. We can assume that this wave count is wrong and we should look for something else. So here, max upside possible with this chart can be 18,033. We are going to discuss 3 cases, by the way. Why we are discussing multiple cases? Because at this point, we don't know what is the perfect wave count. Okay, we cannot have a perfect wave count because it is going up, opening gap up, then breaking down towards 0.600 Fibonacci, and it is not giving any complex correction. So that indicates that it could be ending diagonal or it could be some complex pattern, which we cannot project exactly until it is complete. So this also has happened previously. If I show you the chart, so here also you can see the rally was 3-wave from this point onwards. After making this low, this rally was 3-wave structure. So I was pretty damn sure that 18,115 will not be broken. So that was the main crux of this analysis. And here also we were, if you are a follower of our channel, you already aware that we were not able to perfectly forecast these moves, because again this was developing some terminal pattern. Okay, so this was developing some pattern which will fail to break the previous swing. So same thing is happening right now as well. Here we don't have a perfect wave count, and we are not able to actually forecast how many swings are pending. So there could be 3 to 5 more swings pending on the upside with on the smaller scale, but that's what we want to forecast. At least we know the levels that 18,900 and 18,050 are levels on the upside for us. From these area we can expect a dip. So overall we are going to discuss 3 cases. This was the first case where we are expecting it will not cross 18,035 and then the drop will start. So this case is valid as long as 18,035 is not broken. So what we have to do, we don't have to pick the top. We can wait. If the drop starts from this point onwards, whatever swing that is made previously. So currently this is the swing as per the last closing. 17,723 is the last swing. If this is broken, then we can say that the trend had changed and the downside has started. So this swing will not be spared, it will be broken. I'm expecting more downside. At least 17,300 should come once this last swing is broken. As of now, we can also get multiple swings on the upside. If it goes like this, let's say it goes like this, it creates one more swing. Okay, so this will be another swing, another swing down, another swing up. So this can happen 1, 2, 3, 4, 5. So these 5 swings can come. It can go towards 18,000, and from this points onward, it can start the dip. So we can use these 2 swings to consider the downside has started. So this is how we can look at the markets for next week. So the second chart assumes that this is an ending diagonal pattern in a 5th wave, and this is a flat correction with a 3, 3, and 5 wave swings on the upside. So this 5 wave swing is 1, 2, which is the major wave count 1, 2, then internal wave count 1, 2, 3, 4, 5. Here the 4th wave is here the 4th wave is not time consuming, so this count is doubtful. And here we also see a price compression, but as per the global cues, SGX Nifty is already trading near 18,000. If we minus its premium 17,950, at least it can touch at the opening itself. So considering that, this wave count could get invalidated at the opening itself. So Nifty crosses 17,930, which is the length of this 3rd wave, because if it goes beyond that, then the 5th wave will be larger than 3rd wave. Then this count will be invalid. So then we have to again look for a different count. So 3 cases we are going to discuss. This is the second case. Third case is like this. Third case, we are again assuming the flat correction 3, 3, and 5 waves on the upside with 1, 2, 3, 4 completed here. Okay, 4th completed here itself. And then the 5th wave has started, which is again looking like a impulse structure. Started from here with wave 1, 2. Then now the 3rd wave is pending. As I said, 1, 2, 3, 4, and 5. 5 swings can be, we can see 5 swings. So it can be very small swings. So this will be wave 1, 2, wave 1, 2. Okay, 3, 4, 5, 3, 4, 5. Like that, we can have total 5 swings going on the upside. Again, here we don't have, like, there is no invalidation point here, but whatever swing it makes, we can consider that as a once that is broken, we can consider that as a start of the fall, or safe to assume that 17,723 is broken, then the fall will start. So this could be the confirmation point for most of us. So if you want to think that, if you want to play safe, 17,723 break is what we can expect. And this is not a big deal to be broken in a single day. So it can touch 18,000 and then can give a sharp drop, breaking 17,723. So this is just a 300 points. We have seen in previous days that 300 points break in a single day is not a big deal. So that can happen. So while this happens, we can see MACD breaking out of this channel. So tomorrow that can happen. In the analysis which I shared on Friday before the closing, I mentioned that Nifty would again go on the upside because it has given the rally at the last month. Again, here there was a good volume. Okay, and we could see here that it has taken support on 0.600 Fibonacci. So here, if you see 0.600 Fibonacci is being respected. So whenever the 0.600 Fibonacci is not broken, the trend is strong. I'm not expecting immediately in next session the selling should come. So either on Tuesday or on Wednesday, we can see the top is being made. So we have to be careful. I think there are some news are also in line. Some RBI meetings and all are also in line. If you know that, you can add those details in the comments. So that's all on the Elliott Wave front. Hope you understand how many swings are pending and what are the levels that we are expecting with the three charts concerned. So with that, we'll conclude the Elliott Wave analysis and we'll go for option chain analysis. In last week, we perfectly forecasted that Nifty will stay between 17,800 and 17,500, and it will expire between this range. Because 17,500 was looking very good support for the expiry, and 17,700, 800 was the range which was a major resistance as far as the option chain was concerned for October expiry. So it was a monthly expiry last week, right? So that happened between this range itself. So now for next session, you can see here 17,800 and 18,000. Both are having same number of call writers. So most likely in next sessions, from this number will reduce at 17,800 as will open gap up. So numbers on the call side open interest indicates the resistances and break of resistance. Like if Nifty crosses this by big margin 17,800, these people will shift to higher position. They will book losses and they will head higher. They will look for shorting the next call. Okay, so this is how the option chain works. So 17,800 is right now resistance along with 18,000, but 18,000 will become the major resistance. On the upside, you can see 18,200 has become the biggest resistance. Just by 0.4, it's the biggest number here. Okay, so this will become the major resistance in next session. You will see that many of call writers will shift their positions to upside or add the positions of 18,000 as well. So this is the major resistance, and 17,200 is a second major resistance. On the downside, put open interest acts as a support. So whichever number which is biggest on the put side, it will act as a support. So here, as you can see, 17,700 is a major support. So put open interest in lakh is 45 lakh. So here, this is the major support now. Contrary to this, not contrary, but to support this, we have a swing at 17,723. Okay, so if you know that if this support is broken 17,700, we can see a sharp dip. 17,500 is an easy target, which is the next support. So this is the second major support. After this, there may not be good support, and 17,600 is also looking support, but usually in the multiples of 500, the support acts. So after this, I'm not expecting a good support. Maybe 17,300 could act as a support, but after this, usually 17,000 will be the support. Break of this 17,500. So 17,700 to 18,000 as of now is the range. Break on either side will see 200 points drop or a rally. Okay, so if 18,000 is broken by big margin, it closes above 18,096, we can see 18,200 to 300. Okay, and if 17,700 is broken, we can see 17,500 minimum, then 300, 17,000 are the ranges as per the option chain. So hope you understand the analysis and hope you like it. Do add comments, support our channel. Thanks for watching. Bye bye.